That was a very good question, and to repeat it, it is how to consider asset allocation, how in fact to increase asset allocation to Africa. And I'd like to set out a 6-point plan, 5 simple points, and then manager selection to be the final one. Just by way of background, I started a private equity fund in Africa called 8 Miles with Bob Geldof, and I sit on the board of the Africa Enterprise Challenge Fund, which is a development fund backed by a number of countries, as well as providing advice to governments and individuals on entering Africa. My first suggestion would be global asset allocation. There are a few principles that I look at when considering asset allocation, and when Africa comes to mind, I don't look at today's Africa, I look at the Africa that we'll see 15 to 20 years from now. And the key factor here is the sheer opportunity, scope and size of the continent. 1.1 out of 7.2 billion people, but more importantly, many of the youngest people in the world, working hard, striving to succeed, backed by fantastic opportunities in land and natural resources. So the long-term asset allocation I would allocate to Africa is higher than would be indicated by all normal measures. Secondly, I would drop into the regions and I would allocate in 4 categories: Pan-African, West Africa, East Africa, and Southern. And the reason I say that is that there are some very good Pan-African opportunities which are met by the larger fund managers, but locally, West, East, and Southern, there are very strong SME opportunities which will only be found by managers who are paying attention to those regions. So I would strongly recommend that secondary approach below the continental approach. Thirdly, I would look for an ecosystem that is not only growing, but also is maturing and developing. And what I mean by an ecosystem is a system of government and society, institution building that is supporting long-term business development. And by way of an example, if you look at Nigeria today, what an incredible ecosystem that already exists and that is developing even further, meaning the role of the stock exchange, of leading institutions, of government, of lawyers, accountants, and financial institutions. So the ecosystem, country by country, I think has to be judged, and in some of the asset allocation I am doing, that's something I pay a lot of attention to. Fourthly, I look, and you may find this unusual, at the existence and role of a sovereign wealth fund. And it's great to have on the panel today the chief executive with me here of the Nigerian Sovereign Wealth Fund. This is extremely important because this demonstrates the role of national sovereign capital in the provision of risk capital to local fund managers, to private equity managers and others. And I think having a sovereign wealth fund which is up and running and active and paying its part in society is extremely important to international investors. Fifthly, I would look at the private equity legal and regulatory framework in each country, and I'd want to make sure that it is reasonably sound. For example, a recent development in Mauritius, the new limited partner law, was excellent. But in South Africa, the limited partnership law is not as strong as it could be. And if you take country by country, I think the framework around LP law is extremely important. And I think there are going to be some big strides made on that front in Nigeria soon. So again, I would point to Nigeria as a very good example of where much work is being done. So having done that basic analysis, those 5 steps, all you've got to do is pick your fund manager. And that is relatively easy. I would not be tempted by excessive, enormous, and incredible returns. I've been there, seen that, invested in those. I would look for soundness, consistency, discipline, and do pay attention to the due diligence questionnaire presented by the manager himself. That should be extremely thorough and should answer every question you have. And if a manager doesn't have his own DDQ pack in preparation, that's the first question to ask. Why don't you have that? So I think there are tremendous opportunities, and that would be my 6-point plan for global asset allocation, which should lead to more global capital going to Africa. Thank you.
Mark Florman had been discussing before our meeting some of the asset allocation questions, and I wanted him just to continue briefly on that subject.
Okay, thank you very much. Well, just to wrap up, because I know we're at the end of our time, but 6-point plan in terms of global asset allocation would lead, I think, to a greater weighting towards Africa, in particular if you take into account the next 10 to 20 years. And I think what we've heard today on the panel is a number of comments about the importance of an ecosystem, a thriving economy, and financial inclusion, i.e. the provision of more individuals, companies, and families coming into the banking net. And I think, in particular, as His Excellency Minister Aganga is here and is speaking next, it's worth noting that as we spoke then about regional allocation within Africa, I think certain hubs are going to emerge. Ignoring the north, I would imagine that Nigeria, Kenya, and South Africa are the principal emerging hubs for my particular industry, which is private equity and venture capital. And a lot is going on in each of those countries in order to develop an appropriate, full legal and regulatory framework. And you'll see also that, of course, sovereign wealth exists in each of those areas, which is one of the 6 measures that I had. So I think if I was in charge of billions and billions of sovereign wealth capital, I would weight favorably sub-Saharan Africa at the moment. And I'd look beyond some of the obvious issues that are being discussed, but to get that allocation in soon, because those decisions that you're going to be making on allocations will last 5 to 15 years. And I think this is therefore a great year to recommit to Africa. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.